to talk about two things and only two things this week. This is March 21st as I record this, and 2 days from now, the U.S. government will have to shut down again. We've gone through another $1 trillion in 3 months, and the debt now is over $20 trillion, headed straight toward $21 trillion, and the people aren't mad about it. I really don't understand it. When we go back for G.W. Bush, we're sitting there with $7-8 trillion, and we're worried sick about it. And after Bush and Obama, we go all the way up to $19 trillion. We 2.5 times the debt. And then Trump comes in, and the debt is worse. And for example, if we don't reach and raise the debt ceiling by midnight the 23rd, then the government has to shut down. So when they raise the debt $1.2 trillion in the next 2 days, and we know they will, we know they're not going to shut the government down, even though they promised to do it. So what's going to happen is they're going to raise the $1.2 trillion, which is a 13% increase in the size of government overnight. And what makes it worse, in the month of February, we had the worst deficit in the history of the world in 1 month at over $215 billion. If you took $215 billion times 12, you would have an annual deficit of over $2.5 trillion, where it has been running under Obama $1.2 trillion, $1.3 trillion, $1.4 trillion, and now we're looking at over $2 trillion in this year that ends on September 30th. And every time we do raise these debt limits, and to make this one worse, tomorrow on the 22nd, it's almost clear that the Federal Reserve will raise interest rates 0.25%, which will put another $35 billion of interest on the debt. So if you want to watch how fast the debt is going, just go to usdebtclock.org. usdebtclock.org and spend 30 minutes looking at what your government is doing. But people, I can't stand by and not be calling my senators, congressmen, writing letters. I mean, you've got to realize it's not about my generation. It's about my kids and grandkids, and primarily my grandkids. This debt can never be paid off. The tax cuts are now, our tax revenues are going straight down. Our spending is going straight up. And it is absolutely absurd when you look at it. So what's going to happen, not only is the debt going up, we have interest rates going up, and every time they raise it a quarter, $35 to $50 billion more a year, and you just see that deficit continue to catapult. I read an article the other day where they expected the U.S. to reach their debt to reach their GDP by 2028. And this was about 3 months ago. Now the author is saying, no, I'm wrong. 2024, I've taken 4 years off. Our debt's going up that fast. And what you don't already realize is nobody wants our debt now. The Japanese and Chinese that own over 10% of our debt are going to liquidate that debt. Why they want to sit and watch the U.S. dollar get killed? Because we print so much money. And the only reason we're still standing is people have faith in the U.S. But it's not working. Trump's plan's not working. You can say we cut taxes, makes the economy better. And believe me, I'm for tax cuts if you didn't have the debts we have. But it does not add up any way you try to add up. You can call me and argue with me, but you're going to lose because you just sit and watch it month by month on the usdebtclock.org, and you can follow it yourself. You don't need me. So as we look at this, we realize that last Thursday, $73 billion in 1 day. Not only was February the worst month of all times, last Thursday was the worst day of all times. It's $73 billion debt that day. So we're seeing these things go up, and it's amazing that The $220 billion in February was bigger than the GDP in New Zealand and Greece. I mean, this is unbelievable. And this is just accumulation of debt being compounded because interest rates are going up. What's the best thing to have if interest rates are going up? Well, let's talk about what happened during the June 2003 period till June 2007 period. 4 years, going 1 year, 1 year, 1 year, 1 year. Let me read you the interest rate, the federal funds rate starting on June 30th, 2003, 1%. June 2004, 1.25%. June 1005, 3.25%. 2006, 5.25, and on June 30th, 2007, the federal funds rate was still 5.25. So we saw the federal funds rate go up 4.25% in exactly 4 years, and the price of gold went as follows. 346 started on June of 2003. The next year was 396. Next June, 437. The next June, 614. And the next June, 651. Gold has weathered, and gold is the best investment you can make in a rising interest rate environment, because the reason interest rates are rising is because money is being printed and inflation is being built into the equation. And with trillions, over $200 trillion of smoke, mirage, in the form of derivatives out there, you can watch for another crisis in probably the next 2 years with what's going on. My message to you today is caution and to get after your senators and congressmen, because by doing nothing, you're letting them keep voting. And then you hear about infrastructure financing, and they just approved a $900 million for a tunnel improvement in New York. And I mean, it just goes on, and we have no money to do any of this. It's all being borrowed, and every penny is having interest rates paid on it. So watch the bond market. It's going to continue to sell off. And if you're holding any bonds, you need to be out of them, because interest rates are going to go up for the foreseeable future because the money being created and inflation is being built in for the future. Now, we'll be happy to talk to you about this, but I wanted to spend the whole time today on the debt, because here we are, the third time this year, or since Trump's been president, that we're raising the debt ceiling. So right now, the last comment is currently the debt is expanding 36% faster than the GDP is going up. So this is the debt is. So this is unheard of. We're trying to buy a growing economy. It's not working because the tax revenues are not there. So give us a call at 800-247-2812. That's 800-247-2812. We'll be happy to talk to you about it. But I'm also hearing incredible rumbles out of Asia, Singapore area, and our contacts in China, that something huge to do with currencies and metals could happen as early as this weekend, or certainly before the fall. And with all these cryptocurrencies in development that are going to be backed by gold and silver, I think it's all tied, and we're going to see an explosion in these commodities. Gold and silver, they've been sitting still. And gold had a great year last year, but silver is still ready for its big jump. So give us a call while premiums are low and inventory is available. Once again, it's 800-247-2812. And if you don't have a self-directed precious metals IRA and are interested in one, give us a call to discuss. And if you're not familiar with cloud hard asset storage, We have the lowest storage rates in the world. If you're not a client and already have your metal stored, call us and we'll tell you how you become one of our clients. We have very low commissions, very competitive, and we have the lowest storage rates that I know of. So this is for this week's Precious Metals Market Update. This is Tom Cloud signing out.